Hello. Thanks, everyone. Again, thank you for joining. Obviously, Redefine Tomorrow 2025. Our panel, our fireside chat today is Making Markets, the Art of Crypto Liquidity. My name is John Lagman. I work for Bloomberg. I'm the APAC Crypto and FX Workflow Specialist and Strategy Lead, very long term. I have the joy of being able to talk with Johan Turpin. Ironically, I was saying earlier, I think it was 2022 was the last time we were on a panel. And I think 4 months later was November, and we know what happened then. But Johan, I mean, anyone in markets should know Wintermute and should know you, but maybe just for those who may be, just curious and joining this chat, could you, give a kind of brief introduction about yourself and Wintermute?
So about Wintermute itself first. So we started in 2017. Sadly, not really at the time of the ICO wave, but more generally like in the winter of 2018 as such, between the time we set up the company and then we really started fundraising. We've grown to be essentially the largest spot crypto market maker in the world, so spot crypto trading firm as such. So we do 10 to 15% of the volumes globally. Trade about 450 tokens, trade up to about $36 billion every day, and have grown over time to just cover more and more institutional products. So we're quite present in DeFi, CeFi, OTC as such. Broadly based, well, basically born in London. We've met in Singapore actually, so we set up an office in 2021 in Singapore, and now finally a week ago, two weeks ago, basically have our first New York office. While having had some presence in the US for some time, but then we can discuss that in more detail later. But essentially now more 3 centers as such. Even if like it's very much a representation office at this stage, there's no trading per se happening in the US. And I said for Wintermute, I mean, so I'm one of 3 co-founders originally. I'm the one who's got the foggy title of co-founder as opposed to my co-founder and CEO Evgeny. So I tend to be the ninja co-founder. Basically, I'm the one who built more the trading side and the ecosystem side, I should say, and then the BD side of the business and the venture side of the business. And if you and trying to look at the next frontier as such with Evgeny, and very much helping and guiding the Asia growth nowadays. So in Korea at this stage, spend a lot of time in Japan. So it's more Northeast Asia at this stage, but obviously, Thailand is a big center of interest as well. And then just seeing how we interact with smaller Southeast Asian markets as well. But essentially, I'm a former trader and a fourth time entrepreneur with Wintermute, mostly in fintech trading related ventures, and sometimes more on the venture side. So still investment related, but venture studio side as well. For the last 15 years now, and planning to continue for some time. So that's it for me.
Okay, great. So as you said, you co-founded Wintermute in 2017. So you've definitely been through quite a few crypto cycles and stuff. I mean, maybe looking back on your early days, was very largely retail driven. And as you said, you're seeing more institutional, the landscape becoming more institutional, or, how's your kind of approach to how Wintermute approaches market making changed? Or if it has, or maybe it has not.
It has. So I would say 2 things. We were generally building and started in crypto with the view that the market would become more institutional. So part of my pitch in Seed 1 in 2018 was very much when BlackRock has like 1% of their AUM in crypto we're golden. The total crypto market cap, I think, was about $300 billion at the time. It was about a tenth of where it is now. It is interesting to see that it not only took like 1 extra cycle, but obviously 2 cycles to really go and get this sort of names and getting Larry Fink to do some of the evangelization to talk about crypto as well, as much as we do. It's changed a lot over the years. So I think I'll hint on some of the points we're going to touch on later, but I would say we've been very much with the view of being builders first. So we had a view of doing DeFi from 2008, 2018, early 2019. So it was very much on screen and on chain first, and this is where trading was happening. From the late 2019, we saw first few OTC blocks or so, which were more essentially helping some exchanges to address some large customers' blocks. That was one of the hint of like there's more VIP whales or so, as we call them in crypto space, and more large not necessarily institutions at that stage. We saw Brevin Howard, Paul Tudor Jones, and so on, starting to write those letters and being a bit more vocal about them, about their interest in crypto, like June of 2020, as far as I remember, Paul Tudor Jones' letter. And then essentially, I think Brevin announced the crypto funds and so on, and it's more institutionally driven crypto funds in late 2020, when Bitcoin was around, sort of moved from like 10 to about $16,000 or so. And at that stage, we had about, so if you think of our volumes in 2021, which was a fairly busy year for us, it was 90% on screen as such, so very much on exchange, centralized exchange, 5% on chain, 5% OTC. And you compare that with 2024, which is essentially 15, nearly 20, sometimes even 25% of the volumes in a given day are OTC. And then DeFi, to my despair, DeFi stays at 5%. There's been a bit like a user acquisition on the DeFi side, but still just stays around the same volume levels. And the rest is what we call CeFi, centralized exchanges like Binance and Coinbase and others. So there's definitely like a big market into the business and how institutional trading has evolved as such, and have really just entered the space. Mostly through blocks, mostly spot blocks. There's some interest and some growth on the derivative side. It's still more delta, what we call delta replication as such. It's much more CFDs that are really growing, as opposed to options yet. So the option market in crypto is still tiny. It's actually fairly institutional from the start on the option side. It's fairly well dedicated. There's a lot of traditional market making firms that actually do some crypto market making in options on screen at least. But essentially, this is still a tiny market. So I would say OTC has grown, institutional OTC has been a big sign of institutionalization of the space.
I see. I'm curious. I mean, obviously, you were talking about how the OTC volumes grew from, let's say, 5% of your overall mix to about 25%. So, if looking at your numbers for 2024, easily the growth was 313. And as you were saying, I guess derivatives or options have been, it's been very institutional. And from an option standpoint, I guess it's been small. Kind of curious, coming from Trafi, do you feel it's too small in comparison to where the option markets are in a lot of, say, the markets that you traded before?
So as a former option trader, I would really love it to. So it's for guidance, it's option volumes are essentially 1.5% of the total market, while in TradFi is 25, sometimes 30% of an overall market. So it's very, very small. There's a few reasons to explain why that is. I think institutional volumes are still a small part of the overall mix. So, options are not for everyone. So it's very much you need to understand what you trade, and then I think that's one of the explanations. So it's not there's still a lot of retail volume happening in crypto. So that's what's part of the mix. I think it's also that most people would go for options in terms of for the purpose of very much hedging or speculation in terms of getting higher leverage, and then you already have, through perpetuals and futures, you already have a very, very high access to leverage in the crypto space. So I think this is one of the limiting factors that people wouldn't go for options to just go and try to get higher leverage. And then I think the education, the level of education piece is key. Now, I think it's just part of the problem. I think CME, like there's a few very, legitimate traditional finance exchanges that have access, that a lot of TradFi funds and institutions have access to through the traditional market activities. They don't really have the volume is not really happening there. The volume is really happening more, on Deribit. And Deribit has had this whole path of like moving out of Holland, moving to Panama, moving to Dubai, and so on. So I'm curious to see how the Coinbase acquisition will actually just help, legitimize the exchange enough to make sure that people can trade on exchange. So I think that hasn't helped institutionalization of the option space.
Yeah.
We more and more options through this. So that's very much that's a real institutional adoption of options for sure. But it's very much it's bound by these bilateral agreements essentially, so that the growth is a bit bound there. I think to also just give even more context on potential things that limited the growth is, I think maybe there's just plenty of opportunities and volatility and the underlying assets. You already trade like 60, 80, 120% sometimes volatility assets. So I think maybe there's enough, or something that's high enough to be difficult to underwrite for risk officer, like at a hedge fund or so. So
Yep.
and then the key that continues is a USD, or like the general margining in crypto can be expensive for these sort of things. So I think it's also another limiting factor. But in general, I'm quite hopeful that the whole series of things that it's one of the things I work on quite often is just trying to get profit banks, for example, or family offices to get more acquainted with the space and trade some of the derivatives there. When you get to a point when there's enough level of education to get a private bank to trade structured products, for example, then you get a whole industry of things where you get someone trading a structured product, needs to be hedged at the bank level. The bank trader needs to hedge with vanilla product, and then it probably comes to people like us, and then we need to hedge ourselves. So basically, we end up trading through the open market as such, through any crypto derivatives exchanges and stuff. So you kind of need this, and then often together you need a long enough duration and a high enough vol, and customers who really understand enough the products together. So I think this is really, really happening, but it takes a while, to be honest. Maybe by next the market,
Yes, hope so.
really...
I mean, I think ironically in 2022 we were talking about hopefully the options market would grow then, and I think at the time, remember, there's these DeFi option vaults and all that stuff. So, but I do agree with you. I mean, education is always key, right? And stuff. So, but one thing you obviously you mentioned about how your background options trade and all that. Obviously, also I know you have a strong background in HFT from like Optiver, and if I recall, some of your co-founders also, maybe other firms, maybe IMC. I apologize.
Yeah. No. 3 co-founders are all from Optiver.
Optiver. Okay. Okay.
And he is also and our first CTO also was correct. Tell me.
Okay. Well, I mean, was it like, when you first started in 2017? I mean, for those who also, let's say, maybe TradFi now and looking to transition, what have been like, obviously, 8 years in crypto is like a long time, but, maybe looking at originally when you transitioned from that kind of background to crypto market making, were there certain kind of lessons you learned, and if possible, are they still something that people will learn now, or obviously the market has evolved, or maybe it hasn't, since the size of, at least for options market, hasn't.
So I think you need to think of crypto as nearly 2 different markets. There's a DeFi aspect to it. There's an on-chain aspect to it. That's very, very different from TradFi. Where we generally have smart contract developers, hires that are very different from the sort of the quant dev traders that we have on the CeFi side. There are different hires. We have a few employees who've switched sides over the years, but it's more the exception than the rule. So that's one aspect of it. While like the DeFi side of it, the handling on chain, handling transfers, handling different chains, that's actually very, very different from TradFi. There are aspects that are, as the space evolves, essentially it's just been, the space is becoming more and more technologically sort of friendly and interfacing with TradFi more and more, because I mean, if you think of 2017, and if you think of like things like stablecoins that came up just because people didn't have access to, you couldn't really swap BTC for fiat so easily, so people came up with stablecoins because they wanted because the banks were not open over the weekend, or because essentially they just wanted to implicitly be short, Bitcoin, for example. So so many innovation happened because there was no interfacing between essentially crypto and TradFi. Some of the things that we offer to some FX platforms nowadays, like CFDs, is purely like, it's very much a TradFi product. That's not new as such, but it's only really grown very recently. There are things that are very different from TradFi that you have to really keep in mind in crypto. That's really led to how we build a business. And so if you think of, we discussed my role a bit earlier, but my first title was head of trading, but it wasn't really head of trading that was needed. There was much more of a head of ecosystem and just plugging and connecting with exchanges and plugging with capital. Because still today, there's only a few similarly prime brokers out there, but there's no real there's no fluid access to the crypto market, essentially. So exchanges are custodians themselves, so it makes things a bit different, but essentially you cannot have like a PB that you just connect to and then suddenly they give you a direct market access, and they give you financing, or the source inventory for you doesn't exist. So we had to aggregate very much the capital ourselves, and we had to aggregate, and then that's why and the interest in us, and the fact that we built a whole business development arm to the business, essentially, is that you had to source inventory from foundations directly, essentially. So you just have to go to people and borrow from them if you generally want to trade market neutral. Of course, if you want to buy inventory and so on, you can take that at risk, but it means there's a few issues around scalability, and then why do you find again that capital to go and buy these tokens, and do you want that exposure? It's a different business, So I think there's all these aspects are very different from traditional finance. Now the on exchange, the CeFi, what we call CeFi, such centralized finance, the on exchange trading just looks more and more like TradFi very much. And some of the API offerings that we have are very much fixed. They're very much TradFi friendly. Like if you come from TradFi, you can integrate with our APIs very, very easily. So I think there's a whole part of the crypto space that's very much there to help TradFi interface with it. So yeah, so there's two big facets to it.
So one of the things you talked about in your introduction is obviously your, I guess 2 weeks ago you opened your brand new office in New York. Talking about US, and maybe we can avoid talking about immigration and all that, but how does the regulatory landscape, under the new administration, did that make it more favorable or less favorable for you when you approach the US expansion? And, are there specific opportunities that you see?
Yes, I'm absolutely not qualified to talk about immigration, even if I'm an immigrant myself in many countries in many ways. But stick to like the new presidency, let's say in the US, and if you stick to what is done to crypto and as such, and I think it's been a big breath of fresh air, to be honest, for us especially. So we had made a very conscious decision of not having an office in the US for many years, and we found that the previous administrations or the previous chairmen of the SEC were just pretty unfriendly. So I'm very, very happy to see the change. I think you need some regulation to a degree. I think it's a bit of like want to drive on the road, but you're just happy that there's the signing, that you're happy that there's barriers, safe, there's happy that there's stop signs sometimes. But you cannot drive a car if there's only stop signs everywhere. So it's a bit of like finding the balance is always the art, and is part of the game really. We have actually announced it recently, but we've hired I don't like necessarily the term lobbyist, but we've hired someone to represent us and actually interact with the crypto task force. My co-founder and my CEO were actually traveling pretty often to DC and so on the last few months to talk to the crypto task force, and we were very, very happily surprised and like how receptive they are. And I think there's a perception that like a lot of governments or a lot of regulators just understand crypto, but then actually, I think there's still a lot of research to be done, and I think a lot of the groups and across many countries, to be honest, it's not necessarily US in particular, but I think it's tricky on. I think we just want to make sure that DeFi is not misunderstood, essentially, so I think it's just very useful to be part of the dialogue. Before that, we had made a very conscious decision of being mostly London-based as such, and so between London and Singapore, and very much separating the business, so spot in London and derivatives in Singapore. And then just we also had made very conscious decisions and limiting our own business model to make sure that we could trade as much as we wanted across assets, which means that we only face institutions, and then we only trade our own capital. So if you do this, you very much reduce the regulatory risk as such in a very big way. And then we're quite looking forward to do a lot more in the US. I think it's going to be, especially from New York, it will be a very, is Trafi. I don't know if we'll trade Trafi products even to a degree from there. That's for much longer term, but I think we'll definitely face a lot of TradFi institutions that want to get into crypto from there. We have other aspects of the business where we can have synergies with the US in general, where we see we have a venture arm, and there's a lot of talent in the US. And then we do not manage anyone else's money, but we do borrow. As I mentioned, we aggregate the capital ourselves. There's no prime broker. So the leverage we get it from family offices, we get it from hedge funds and so on. So having more presence in the US is just very useful, because whenever you borrow, whenever you raise capital in general, it's a trust, it's very much trust-based relationship. So you just want to be able to meet people and build that trust.
Understood. So, one of the things I remember, again, sorry not to bring back 2022, that we had talked about, I think on a panel and stuff, was, obviously you had brought up, your view that sometimes in the markets or certain exchanges, there might be a bit of like market manipulation or whatnot. I mean, being such a large market maker yourselves, I mean, how do you guys kind of make sure, if your market concentration is quite large on, I won't name any exchanges, how do you guys kind of address that to avoid maybe the same kind of issues?
In terms of the FUD that we sometimes often have to address, and I think there's many facets to it. I think so. From 2018 at least, we put some articles out there essentially denouncing market manipulation as such. We think it's not only very bad practices, but I think I personally think that it leads to also bad things, even bad outcomes as a business in general. It's not only like even if it was legal, we wouldn't do it, because it just leads to essentially poor standards. So like imagine John, suddenly tomorrow you're at the head of Wintermute, and you have a practice where somehow there's somehow employees are market manipulating somehow, and then if it leads to poor standards, like how can you even trust them for the daily job? And then you see that the consequence, you see that sort of the poor culture, poor standard, poor culture. You see that in some of our, I don't call them competitors, I call them wannabe competitors, because I don't consider we play the same game. And then the tendency in people who do crime per se, or who basically just have they would want you to think that they're the same person, or they're the same sort of entity, same sort of they're in the same business, because they want to normalize, crime essentially, and we really don't want that. We very much consciously make an effort to actually make money the right way. We basically make less than a basis point per trade as such, and we build infrastructure to do that. We don't need to do crime to make money as such. I think sometimes the question is like, how much effort, how much time do you want to spend? Because people heard market manipulation and they heard market maker, and then the only name that they can name is Wintermute, and then sometimes they put the two together and they build a narrative around it. That's there's sometimes we just have to choose our battles, and then it's more about who do we care, may actually think that way, and then it's just like we address it immediately if we do care about them. And then if it's just noise on the internet, I mean, you can find anything, anything that's happened, that's never happened, on the internet anyway. So we continue to be quite adamant on that, and just really pushing for the best practices in the space. And it's also, I found it a very good filter as well for foundations or for people we did not want to do business with. And then if you're very clear about how you do business, then you actually tend to push the bad actors away as well. So I like to do that. Like to be quite clear about these things.
Understood. So, moving on to, let's say, ETFs. I mean, obviously that's been a game changer, for institutional adoption. How do you feel the introduction of the spot Bitcoin and Ethereum ETFs have kind of changed your business as a market maker? And what kind of impact do you kind of expect from Sol and Ripple ETF approvals?
So it's less of a first degree change than more second degree change. I think it's really helped the space to just be more democratized as such, and more institutionalized. I think it's helped change the mind of. I think it's maybe the U.S. presidency that's helped like some banks and so on to really just. You also talk to a lot of banks, and I'm sure you've seen the change of perception. There's a few lunches and dinners last year, pre-Trump election, and it was pretty clear that some people would change their stance if he was elected, change their stance on crypto from negative to positive. And it's a bit of it's only for now. It's only a secondary effect in the way that we broadly as a firm, apart from the venture side of the business, we market neutral. So prices go up and down. It's helpful when prices go to new highs because there's headlines, there's a wealth effect. So actually our customers, the people we face, they benefit from it. Ultimately, we make money from volumes, not really from things going up or down. So it's more of a secondary effect for us. There's also an aspect of I would say it's helped institutionalization. I would say it's helping some people who really not even trading crypto yet to actually have to think about tokenization to a degree, and at least understand the tech. And if you think of the perspective of a full tokenization of the space and tokenization of even equities, for example. So if you think of like, the stock market is going to be tokenized tomorrow, you just really need to understand that even if you don't want to trade crypto, you have to think of the tech, and you have to think of how you're going to approach this. And actually, for some institutions like banks and others, just the fact it's not even talking about DeFi and integrating on chain. It's just the fact that it's a 24/7 market can actually be quite a difficult thing for them to just do structurally, and how they build their infrastructure as such. So these things have to really be thought out. But yeah, again, as a business, it's more of a secondary effect. The last piece of it, I would say, is that ETFs per se, they've been a lot of the flow that we've seen first half of 2024 was very much so a third of that, the $15 billion or so that came in early 2024. I think 5 billion of that was essentially people, just hedge funds, just rebalancing spot BTC versus ETF BTC because they could get better margining. So some of that, didn't necessarily have like a lot of price impact per se. So it's more just capital, optimization per se for them. And I think like the whole, for me, the whole democratization of the space through the ETFs is very much coming through very much how does it get fully distributed to our parents or to grandparents and so on, in terms of like, will they actually, they can actually, in most countries, they can actually get access to the ETF, but will they get the private banker, their financial advisor to actually promote this to them? And I don't think that's really happened much actually even in the US. So there's a whole dimension of like people can now they have access to the product, but then are they actually being educated about the product? That's not necessarily happening yet. Yeah, it's more of a secondary effect, I would say.
Curious, because we were talking about options earlier, and maybe I could say earlier that recently, let's say recently, and I can't say the client, I was at a Trafi client, and he was talking about how they were going into crypto options, but he was like, yeah, but we're not going to, obviously we're going to not going to touch exchanges. And they were actually doing quite a bit on IBIT. Do you actually think maybe from an options standpoint, I mean, given that some players, and this would be a very TradFi type place, they were actually saying that they're getting a lot of interest just on the ETF options, and obviously from a regulatory standpoint, it's a lot easier for them and stuff than touching Deribit or whatnot. Yeah.
Yeah, I think it's part of a thesis on how institutionalization happens, is that we end up interfacing between spot, and then basically we provide essentially through CFDs. You have the same dynamic where you just end up providing a delta replication to institution essentially. So makes sense. I mean, it's less plug and play into it is plug and play on their side. It is easier in terms of getting like prime brokerage is actually not too friendly yet to the crypto underlyings. It's progressing, but it's not too friendly in terms of you get much higher leverage from trading, the same volatility options if it's just a standard, well understood equity than actually an IB option. I haven't checked recently, but I'm probably quite certain about it that you get much more leverage, implied leverage, if you trade traditional equities than IB options. I think it makes sense. I think it makes sense in terms of like just trying to go through the path of least resistance. Really, I think it's better understood by the risk officer. I think there's very much a framework there. So yeah, true. I mean, it's similar to like MSCR that somehow has more option trading volumes than actually the largest single equity options in Europe or so. And I think it's third, and so you basically end up with a derivative, like a treasury. It's a derivative of Bitcoin that itself has derivatives on it. So I think it's more about a mix of like passive least resistance, and then where you have more vol, more implied leverage in that case, just people just want to trade, and they don't want to think too much about not only just transferring funds and so on, but then just how do they do it? They just basically want to focus on trading.
Yeah, makes sense. A couple times in our discussion, you've talked about your Wintermute ventures, and you kind of alluded to sort of your strategy and how it helps. But is it something you can maybe explain a little bit more about? How does it help complement your market making business, and what kind of sectors are you focused on for, I guess, second half of 2025 on the venture side?
So venture side, we started investing in 2020. It's very much it's not necessarily synergistic with the business because there's more Chinese walls than anything actually with the trading business. It is synergistics for the foundations that we invest in most of the time. So there's many so decentralized exchanges and whatnot, protocols that are more come to us because they will want us to invest, and they think it's, and in their right, there's more alignment long term as a company in general. There's more alignment, if you have exposure to their project to help on the market making side. It helps to a degree to lower some KPIs that we would have to go and help a foundation or help or integrate with an exchange. It doesn't solve everything. It just doesn't mean because we simply invested that we'll do everything for the project as such. We already waste time and money as such. We so far over the last 5 years we've invested the exposure, I would say, to about a couple of $100 million towards about 137, 140 or so projects. It used to be purely infrastructure driven, very, very trading related. It was very much what I like to call the Ashton Kutcher syndrome as such. So Ashton Kutcher helped Twitter grow quite a lot through his name essentially, and then he was like he didn't have any shares, and then he went to invest in Airbnb and Uber, I think. So in some ways, without the aspect of fame or notoriety on our side, we helped early exchanges, crypto exchanges to really grow, but we didn't necessarily have any shares in it. So it's very much this aspect of or if we help a company or a group really, really grow, we should have some extra delta. That's one aspect. And there's one aspect that's purely we just believe in the space, and we think it is very very much new finance as such. So we just want to belong the space. In terms of sectors that we focus on, we have done a bit more sort of crypto adjacent to AI nowadays. More still, I think we're always more comfortable with infrastructure. So we don't really do gaming per se. Or we don't really do IP related things. We understand more infra tech, analytics and so on better. I think it's more about teams we like to invest in are I would say it's more about the alignment. So we do token investments, but we prefer equity plus token warrant essentially. And I think there's no apart from us not really doing IP related things and doing very little in gaming. We pretty much would invest in any Web3 subsector. So very good question for like the rest of the second half of 2025. I don't think there's really specific sector focus. We look at a lot of AI related projects, but then there's this focus per se. I think it's much more about we invest deep mostly, and it's more about the team, I would say.
Are the AI related projects in the digital asset blockchain space, or some totally different, like traditional industry kind of stuff?
No, they are in Web3. So they're very much in Web3, and they're very much about trying to rethink about how you're computing. So it could be edge computing related, or it could be how access to data is allocated or so. There may be some ZK elements, there may be some so it could be it could be even trading, AI trading or data trading related. But it's very much still in Web3.
Yeah. Do you see a lot of people pitching like AI, some kind of algo using AI, so to speak, or something?
Many people pitch it, but very, very few actually. Algo as in algo trading?
Yeah, but with some AI component looking for some kind of...
Is like financial data is very much the hardest or some data to work with because it's very noisy. So you have some RNN that do some work, but then it's just that I'm a big critic of this. Even if I can see and I did a lot of AI due diligence nearly 10 years ago for various Web2 startups, and I would debunk 99% of them just simply on the basis of the data sets and so on. It's harder to do now because actually you can get so much through LLMs and whatnot and so on. So there's so much free AI tools out there that it's actually harder to debunk people who pretend to build like AI and so on, and to know if they actually do it. It's yeah, I think ultimately it's more about just finding the right teams really. But in the financial space, it's quite difficult to do. I mean, I don't know why you start to call AI just if it's just an optimization tool, or if it's just you call it AI as such. But yeah, there's little that's actually there out there, or I'm not aware of it just because people make enough money and they don't need to raise funds. You know, I think there's only this Goldilocks zone where people make high returns but actually don't need to raise money, or need to raise money from and interact with us. So it's a good question. I think it will happen. It will happen, and it will help people like us as Wintermute, because the AI agents or the algos that run will be, admittedly, should be very price sensitive to execute, and then they would come to people like us who do their best to offer the best prices and such, on chain or off chain.
Okay, so maybe since we're almost at time, finally, what should our audience know about Wintermute's upcoming initiatives, any kind of partnerships or investment opportunities? And let's say someone who's listening, sees a potential for collaboration, how could interested kind of parties connect with you and your team?
There's quite a few. I would say come through the website, interact with us on Twitter, such. There's a few of us as co-founders or so who have a tick. We have a few employees with a tick as well. Just make sure you're talking to us. That's very key. Especially on the foundation side or the crypto side, there's a few people who pretend to deal with us, who pretend to very much to scam people. So just make sure that you're actually talking to us in the first place. And then there's many dimensions where we can collaborate. So we do hire quite a lot nowadays across US, Europe, and Asia. General collaboration where so being in Korea now, so we always look at new markets as such. We don't have investment opportunities per se. We can co-invest on the VC side. We do borrow directly from I was saying from family offices and from institutions in general. We borrow especially USD as such, or stable coins. Beyond that, like collaborations on the trading side, it tends to be more akin to hire and equity hire as such. Any other partnerships, just reach out. And the things that we were not able to find time to do it ourselves, we've incubated. So we've incubated a few. An index company called GMCI, for example. We've incubated Bebop. We've incubated Wildcat, for example. So a lending borrowing platform. So things that we can very, very closely partner with, and then we would build if we were not building Wintermute. We've incubated so far. So it's worth having a dialogue there in general, even if it can be quite an open door dialogue.
Okay, well, thanks, Johan. I think we're at time. Good to finally chat again after all these years, and hopefully maybe I'll see you down in Singapore soon and stuff, catch a coffee, and thank you again. And thank you to the audience for staying with us through the fireside chat. And thanks.
Thank you. Thanks, John. I'm sure cross path. Thank you.